Hi, I'm Hannah Bernard. You're watching Market 1 Minute, and I'm here today with Frank Holmes of U.S. Global Investors. Frank, thank you so much for being with us
Good
today.
to be with you.
So you've talked a lot about gold and inflation. So talk to us about what precious metal investors should know right now.
The biggest thing is this fear trade, and the biggest driver for fear trade comes out every month with CPI data. So when you take the CPI number, and last month it was 2.3, and you deduct it from a 5-year government bond, which is 1.7, guess what? I'm losing money. Inflation's greater than what the government's going to pay me. And whenever inflation is greater than what the government's going to pay you for a 5-year borrow, gold goes up. Whenever it's positive, gold goes down.
Yeah.
That's a simple trade.
So you've talked a lot about a good way to get exposure to gold and play gold is by royalty and streaming companies. Why is that?
Well, royalty has a superior business model, and when you're looking at big cap gold liquid names, it's just a better process to think it through because and I'll give you the financial end of it, they have rising price to book. Most of the mining companies take hits and losses, so there's a whole series of quant funds that like to look at rising price to book value. And royalty companies always do a financing, so it's accretive.
Yeah.
They also have huge margins. Like Silver Wheaton has the largest revenue per employee in the world. Now the New York Stock Exchange, and we're pushing over $20 million per employee. Goldman Sachs, the profitable bank, it's $1 million.
Wow. So besides Silver Wheaton, what are some of the royalty names you like right now?
The Sandstorms, the Franco, the Royal Gold. It's like a race, and you can see them pivot. So last year, this time, Franco-Nevada was the best performing, and Royal Gold was the worst. All of a sudden now, Royal Gold's up over 100% over the past 12 months. Silver Wheaton, the champion along with it. So they seem to go through a wave of one leading the other. So I like a basket and rebalance them.
All right, so about the DNA of volatility. You've talked a lot about this with gold. So what does that mean as far as managing expectations and what investors should know about the DNA?
Most important thing. Most important to understand the temperature of an asset class and the seasons of an asset class. So it's hot in the summer and cold in the winter. Well, what you find with gold is it has a DNA volatility the same as the US dollar. It's a non-event to go plus or minus 20% over any rolling 12-month period. If it goes up 40%, it's time for a big correction. Or if it falls 20%, start to buy.
Yeah.
Gold stocks are 40%. So when we had gold stocks up 120%, that was a sell signal to take some profits off the table, and they did correct. So now when I look at the volatility right now over 12-month rolling, gold is flat.
Yeah.
Over 60 trading days, gold is still below the median. So we could still have a rally going into the Chinese New Year.
You're the father of these coined terms, fear trade, love trade. Are they still key demand drivers, or has anything changed?
They're significant. And that fear trade we talked about earlier on the real interest rates, not the nominal the bank's going to pay you, but after inflation. That's the key factor for gold in every country's currency in the world. The love trade is the rise of Chindia, which is 40% of the world's population, and that is significant in looking at the consumption of gold. And even with the big disruption with Modi canceling 87% of India's paper currency, 87% gone overnight. Gold still is hung up exceptionally well because they're the biggest buyer of gold. It's a race between them and China each year.
Something that you said that makes you unique is your look at PMI. So GDP is looking in the rearview mirror and PMI is looking forward. So talk about that as a macroeconomic driver in the markets.
Well, PMI is Purchasing Manufacturers Index. And if you get a big order to make 10,000 engines, that means you're going to have to order some metal to make the engines. And to make the engines, you're going to consume a lot of electricity. So all of a sudden you find that when global PMI is positive, oil prices start to rise. And there's an 80% probability oil will maintain rising prices, and copper prices start to rise. So it is very important to look at, because you can't make a motor without consuming lots of energy.
Yeah, it's looking forward.
Looking forward, out that windshield mirror. And you can't drive 60 miles an hour looking out and staring out the rearview mirror. You're going to crash. So it's better for me is to look forward.
Frank, as always, so much insight. Thank you so much for being with us.
It's great to be with you.